I think like at this point, like Bitcoin is really its own thing. And I think for investors, that makes it a really nice asset to own. I think for traders, it can be really tough because you don't know how it's going to react to certain headlines and stuff all the time. Like, why was it strong with gold in the past and now it's getting trounced by gold? Why was it strong with NASDAQ in the past and now it's getting like trounced by NASDAQ? But if you're like an investor and it's a part of your portfolio, it actually has a lot of nice, that's like reduces your portfolio risk by having it like so uncorrelated to everything, right? But it's just interesting that like we always seem to have this discussion whenever there's a macro thing. It's like, what is Bitcoin?
Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.
Hello, everyone. Welcome back to another episode of the Hivemind podcast. I am your host today with Jose out, Ceteris. I am head of research at Delphi Research. We have on with us, as always, Jason, head of markets, Jan, ventures partner, and it's been on at least once or twice, Flip. He's kind of our Perps guy. And there's been a lot kind of happening. I mean, there's always a lot happening in Perps, so good to have him on. So yeah, good to see everybody again. It's Wednesday, Jan 21st. It's 11:20 a.m. Eastern time. So Bitcoin is back close to 90K. The market's kind of like rebounding a little bit after the past few days of just trash price action. What do we think about this little reversal? It's Davos now too, right? So there's a lot of like headline risk, and a lot of headlines are moving stuff this morning.
Yeah. I don't know, right? A couple days ago, everything looked pretty good. Like, generally speaking, I'm not everything. Never mind. Bitcoin looked pretty good a couple days ago. And I still think it looks generally okay. Like, I mean, I would have much preferred not to see yesterday's candle, but like, you know, I'm looking at, you know, you have Saylor buying 2 billion right at like the pico top of our recent rally. I'm actually not sure where he got the 2 billion. I wasn't really paying close attention to it, to be honest. But again, his execution was like pretty poor, wasn't it? Like 95 or 96 or something.
One thing interesting on that is, have you noticed how they don't, in the announcements now, they're not saying the average price. They're like making you do the math.
It's like, it's
really
about
hard to do
6K now, right? So like, I wouldn't be like, so I think it just comes down to like equities at this point. Like, I think Bitcoin is like generally doing well, holding in. I think, you know, flows have kind of returned. You had a couple of days of, you know, outflows. Like, I think appetite is starting to return to Bitcoin to an extent, at least much more than we saw in, you know, Q4 of last year. And what I'm kind of looking at is equities and what happens with kind of like TradFi markets. You have like a lot of things seem to be happening again with, you know, JGB yields just spiking. There's just like a ton of shit happening in TradFi land that, while not directly related to crypto, like if it causes equities to kind of hiccup a bit, crypto being weak without, you know, a bid for most shit will just, you know, continue to get smacked. So like kind of my I guess game plan coming into the year was like I was going to see how the first couple of weeks of January went with respect to like risk appetite. I wanted to look at a bunch of the perp dexes to see like what do volumes look like, what does open interest look like what does trading activity generally look like as like a proxy for risk and behavior. I wanted to see how some of these perp dexes performed post TGE, which we could probably get to with Lighter in a bit, as like another, you know, kind of proxy of like where activity and, you know, capital will like coalesce to in that space, right? There's probably, you know, room for 1, 2, 3 good winners there, maybe, but like there's not room for as many as there are. So like I think that would be a pretty good proxy. So I'm just kind of like using this month as like a gauge of like how I want to allocate. And right now it's kind of playing out to like just like Bitcoin's looks okay. I don't think buying here or buying 75K if you get like a retest of Saylor's average is going to really make a difference if you have like a 2, 3, 4, 5 year horizon. But if you're like tactically speaking, like I'm not really itching at the bit to take any like tactical trades right now. I'm looking at things like Hyperliquid with all of these huge unlocks coming from or not unlocks, but like unstaking of these huge whales, right? You have that Tornado Cash whale as well. So like I'm looking at a bunch of these dynamics and just kind of waiting to see how they play out, and then looking to buy just like good coins that I can be comfortable holding because they're not complete shit. So like it's just like the market is just like very like there's a couple good things out there. I think a couple good opportunities, but it's just mostly not great. And I think there's probably just better opportunities for tactical, trades in other markets, like, small caps are ripping, right? There's just like a lot of shit that you could like probably have an easier time with than trying to pick out a few good alts.
Yeah, I would say you've played this quite well. I mean, I don't remember if it was right before or right after Thanksgiving. You mentioned you were,
I was just done.
Yeah, you were just like, I'm done through year end and I'm gonna wait through January. And I think you've done incredibly well. What are some of the opportunities you're seeing? I mean, we've had Onchain run a little bit over the weekend and then get whacked down. You're starting to see some life in some very small pockets, but it doesn't feel like a meaningful bid for any of the coins we know. And so what are you looking for more specifically on where you might get excited to bid?
Yeah, it's a good question. Honestly, like I don't have a great answer for it. It's something I'm trying to answer right now. I'm trying to figure out what I want to bid. The lower Hyperliquid goes, the more and more I get really interested in it as like a place to actually take a bunch of stables and just put them into, not from like a staking yield perspective or anything, but just like, it makes it like I don't know, conservatively just say $750 million a year, right? It's more than that, but just conservatively. And the further it goes down, as you churn through a bunch of these people who are up over a year, many multiples, like that Tornado Cash whale, who's been unstaking and selling like every week for the last, I don't even know at this point, for the last like month plus. He had like an average price of 8.8, right? So like these people are up and they're all churning through their positions, which I think is healthy. Number one. Number two, the fundamentals seem to like generally what you look for is, right, like price and valuations going down, but all the like underlying metrics are stable or growing as like a really good sign of like dislocation in like a shit market. And it seems to me that Hyperliquid's like underlying fundamentals are pretty resilient for the most part. Like obviously trading volumes are down, open interest is down, depressed from all-time highs, but like money making, other revenue sources, the HIP3 things, there's probably pretty good opportunities there, right? I think Kinetic did really well over the last like month or two, but you have to be like really tapped into these ecos to be ahead of that narrative.
And a lot of that reflexivity in the revenue and volumes is just cyclical. Like you're seeing it across the board in all the exchange tokens, and it's quite normal. And I'd say the distribution, to your point, like the distribution we're seeing in tokens changing hands now is quite bullish for a longer term price action.
So I mean, I don't have like many good opportunities. Like Hyperliquid is the one that I'm super like I know it very well too, because I've been following it for a long time. So it's something that like, I don't know, maybe that's like not a good thing, right? Being familiar or too familiar with something can be, I guess you could be complacent, but like, I don't know. I'm curious what Jan and Ceteris think when you just like look at the landscape of tokens, of something that like, if you wanted to allocate like a significant, like 5, 10, 15, 20% of a portfolio to as like a spot position, like where would you be looking in Q1 in terms of things that probably have a good amount of upside potential if the market recovers, liquid enough that you could do something like that and be comfortable holding it? I'm curious like what that universe of tokens looks like for you.
This is basically just like going with my portfolio.
Yeah, so please, Setters, what do you have?
I don't know. I do think this year will be a turnaround year for Solana. I still feel good as like that being my L1 token. that I hold. I still think Zcash is interesting here. I mean, Pump, I don't know. I still think that like Pump has a lot in it. We kind of saw it a little bit over, it looked for a few days there that like the trenches were back, and then pump volumes were up a lot, and then bags came, and then you had,
I mean, to be
the
fair,
same thing again, right?
Pump's been, like actually one of the strongest coins year to date in crypto.
Yeah, I think that like nobody wanted to. I think there were some coins that like ending last year, nobody wanted to straight up show that they like own them. And I think Pump, there's like no communication for a few months. Seems like there's like this RICO lawsuit that I don't know how big of a deal it is or not, but it's something that like they're not talking about. And so I think a lot of people just didn't want to have that going into the new year. But, I think that it was kind of disappointing that it again crashed and burned that like speculative area, right? It looked like it was going to be pretty good there for a bit. And then you have the same old story where some like Web2 or like AI founder comes in and launches a token and it ruins his life, right? And I mean, didn't ruin his life, probably he'll be fine. But like, again, there was no follow through, which is just the same thing we've seen over and over. And it's like at this point, it's very hard for me to keep up with that sector of the industry because it just seems like it's just letdown after letdown. And this gas token thing looked like the first time that people were excited again that something was gonna like real come out of this. And then once again, the founders like, yeah, I don't want to have this token anymore. And they kind of just like killed everything there. And then, I mean, the overall macro also just killed that too. So it's clear though that there's always people wanting like that white whale token. We were on Thread Guy stream a couple weeks ago.
Yeah, the white whale one.
Like, I don't know. So like these meme coins still have this. There's still enough speculative capital that's always kind of like playing in these areas. It's just like, I don't know, man. It just seems like lighting money on fire these days, but the moonshot's always there. I think with like Bitcoin specifically, whenever we get these macro, everyone's always like, is Bitcoin this like macro asset hedge? Is it like this tech stock like NASDAQ? And I think like at this point, like Bitcoin is really its own thing. And I think for investors, that makes it a really nice asset to own. I think for traders, it can be really tough because you don't know how it's going to react to certain headlines and stuff all the time. Like, why was it strong with gold in the past and now it's getting trounced by gold? Why was it strong with NASDAQ in the past and now it's getting like trounced by NASDAQ? But if you're like an investor and it's a part of your portfolio, it actually has a lot of nice, that's like reduces your portfolio risk by having it like so uncorrelated to everything, right? But it's just interesting that like we always seem to have this discussion whenever there's a macro thing. It's like, what is Bitcoin? Like, is it this? I think for Bitcoin, like the long term use case is like very clear that a digital non-sovereign bearer asset is something that you would expect to continue to be incredibly valuable in this world, and especially the way the world is going. But I think like still to this day, like over the short, medium term, it's very difficult at times to understand what really drives Bitcoin price. And like people will say, oh, it's OG selling, or at the end of the year is tax law stuff, or like funds shutting down. It's just a really, and then it's like the start of the year, turns out it was like mostly Saylor, right? It's just a very hard asset to kind of predict over the short, medium term to me.
Yeah, on the Saylor front, I think that caught everyone by surprise. I
had no idea where he had that money.
That's all ATM sales because he's still at a 105 or 1.1 MNAV. So, I mean, it's not what he's doing before, but it's still technically accretive to shareholders. And so He's
That's actually
deployed
pretty good because it got down to like 0.8 or something.
Yeah, it got down, but it helped that Bitcoin nuked. Like MicroStrategy sucked, and then Bitcoin nuking brings the denominator down. And so, yeah, he's over 1. He's able to do it. It's impressive that there's enough of a bid for strategy and for the equity. He's just selling equity shares. He's deployed almost $3.5 billion this year alone. That is definitely what's been driving the market. It's kind of nuts to see that there's still, that much supply overhang. You definitely would have expected that to come down quite a bit with where prices are, but I think maybe there's you've seen some of like the quantum headlines and so, that might scare some people out. And then there's the domino effect of, oh man, if it's going to scare some people, then, others will pull back. And so, regardless of whether you think it's a real risk or not, it definitely has some impact on price. Particularly if you're thinking of this as the long-term buy and look away type of asset, this potentially invalidates that to some degree.
I mean, for pension funds, right? Wasn't that like the guy's recommendation was like pension fund allocation, right? And it's a good point, and it's like it's true. None of us really know how big of a threat it is, but the market perceives it as a threat, and like that's the bottom line. Whether or not you do is like irrelevant. It does, like the market obviously does, right?
Yeah, no, for sure. To some, I guess it can be an opportunity if you think it's not, but it can be an overhang, particularly because it could impact future bids that are no longer going to be there. I don't know that this really changes the thesis for me, at least. So I'm I think it's a headwind, but not an insurmountable one. In terms of the I guess the smaller stuff, when money isn't really flowing into crypto, like there are periods where money's just flowing, and you see that in terms of the pace of ascent for some of these, the quantity of them that are ascending, right? So just like a function of how much capital is going into them, and the length and height that they can get to. And so in these environments, I feel like if you're not in some insider cabal where you're getting a really early look, like you have to be so quickly in and out of this stuff because you see the drawdowns of it, right? It like on one hand, it can be beneficial if there's only one asset running because the hot ball of money just focuses on that. But it's still a pretty treacherous game, and one I don't think I can do well. And so I usually just sit those out and then just watch them rip and then watch them dip. It's actually kind of relaxing, to be honest, versus trying to stay on top of all of them, just like assuming you're not going to make money on this, and it's easier to just not focus on it. Pump. I mean, I think for me, it's and this applies to venture also, is just looking at revenue generating businesses that have some degree of moat that are also somewhat cycle agnostic, in the sense that even in a down cycle, like nothing here is cycle agnostic. It's just the degree to which it is. And basically, in a world where you're at the bottom of the cycle, is this thing still fundamentally fairly or like cheap in a decline? That I think that's like a good floor finding exercise. I mean, like even Pump, if you're looking at 30-day revenue and annualizing it, no one would say that trenches are hot, but they've been they definitely picked up recently, and I think it's trading at like a 5x buyback on FDV, right? So you have that, and buybacks are great, but the thing is they don't necessarily offset flows. So I think what we'll see come into play at some point is the 1-year anniversary for it, right? I don't think it's a factor yet, but there will be some front running of that, whether that's people hedging to lock in the gain and kind of running the risk of keeping that trade open for a shorter period of time, or just people trying to hedge somehow, or people just getting out of the positions that are liquid in anticipation of people selling or hedging. So that could be a headwind, but I mean, the price of it is on a fundamental basis is pretty good. The DEXs, I think, are still reasonably cheap. I mean, it'll be interesting to see what happens with the launch of NYSE. I think that's slated for sometime in 26. I'm not necessarily holding my breath, but I think that could be a boon for liquidity on perps. I still think, there will be people who want spot and there will be people who want perps, but the issue on the equity front on the perp side is just like having market makers do that well. And so if you can have the on-chain assets be there, I think that bolsters liquidity a lot. It helps with funding rates. I think, a part of the cost of the funding rate situation is this off-chain hedging and off-chain market making that needs to be done. And so if you can bring that all on-chain, I think it does reduce costs and ultimately can bring funding rates down or just increase liquidity. And that has, knock-on effects in terms of assets like Athena, which they can do basis trade on some of these assets. And people naturally want to be long the equities. Obviously there will be shorts, but I think overwhelmingly people prefer to be long that stuff. And so Athena actually comes into play in a really productive way because they're the short leg, right? They hold spot, short perp. And so they can provide that sell side liquidity that most people are worried about where that's going to come from. So I think that could definitely be a boon. I don't really see that being too big of an issue for crypto in particular. I'm sure it's going to be KYC'd and gated, right? And so you basically have the people that want to follow those rules can bridge the liquidity, and then everyone else who doesn't want to can just benefit from that liquidity existing in an area that they can access.
Yeah, I think net it's going to be massively beneficial for a lot of these perp dexes. To your point, the liquidity will just continue to get better. To put it kind of super simple on why this is important, it's like equity perps are pretty well known for having horrible after hours and weekend trading. Lots of shenanigans takes place. Funding gets out of whack. Instead of pricing, the New York Stock Exchange, the NBBO, for pricing, they go after, they kind of do their own internal pricing, and that's when pricing can get way out of whack because ATSs don't even, alternative trading systems, don't even run on the weekend, so they're having to do a lot internally, which just makes it really, really tough. So with 24/7, when this does go live, it should help traditional equity perp models pretty well. Now, what does this do for CFD type of model, something more akin to what Ostium will do and Variation will do on the RFQ side? TBD, those are generally speaking just the SOFR plus whatever premium they want. But I think overall, this is a net beneficial for everybody using traditional funding on equity perps. I think this is ultimately good. I mean, I think there was a lot of people bear posting that this is the death of perp dexes, but I think the narrative over the last 2 to 3 years has been that we ultimately want to replace TradFi rails, and now it's like, okay, they see the threat, they're coming in to play ball, and now it's time to step up to bat and perform at a very high level. I think there's a few teams that'll do that and continuing to innovate and push forward. Some are partnering with TradFi people, some are doing it completely internally. But net, I think this is very beneficial, especially for people who love trading equity perps. There's still a cost of carry for that trade, and you might be better off holding spot. But if you want to play leverage on some sort of event, like let's say NVIDIA has earnings on Thursday, and you want to place the trade a week before, you can actually hold it through the weekend and go to sleep at night like decently well. If you think that's an attractive entry. So I think those types of trades get a lot more attractive, and you can kind of sleep better at night with those.
Yeah, and just to add to that, the early on part of the crypto thesis was kind of a reg arb, if you want to loosely call it that, and with these players coming into the space, you still won't be able to, they're almost reintroducing the reg arb in terms of users not needing to KYC to access the liquidity, right? So I think like you mentioned, the 24/7 component, you see a lot of these platforms needing to reduce the amount of risk they're able to take because they have to warehouse it or get creative solutions in terms of how to not be too exposed in one direction. And so, I definitely see it as a boon, big time, and hopefully can also help with option space as well. But we'll see.
How do you think this helps with the option space a little bit?
Well, if it can, I think you can get equity options because you need the spot, whether it's spot or perp liquidity, to be there for market makers to hedge, to provide, like if they want to sell calls, they need to long somewhere else. And so if they need to do that on centralized or like on non-crypto rails, it's a lot harder for them. But if you can kind of do it here, it's potentially viable. But it'll be an interesting test to see, because the thesis is always that perps are preferable to options because they're easier to understand. It's very vanilla. It's pretty linear in terms of exposure, and so it'll be interesting to see if like the whole market for equity exposure just continues to be dominated, or is dominated by perps in the same way that crypto ends up being.
I think largely they probably do. To your point, they're just this more simple instrument. And I mean, internally, I've been quite bullish options in crypto, and I still am, but not for retail. I think it's a good revenue and business line for these perp dexes. They have a lot of pricing power. It should be a high margin business for them, but it's largely catering to institutions. Like, I think if you can do that well on the majors, especially players who are more focused on the majors, I think that's an optimal way to hedge. I think for hedge funds that have a lot of the long tail, I think hedging via options is actually quite poor. And I think 1010 is a great example, because at the end of 1010, your alts were still, like, broad basket was still down 25%. But after that wick was over, ETH was, down 3 or 4%. So all of a sudden your hedge in that moment was quite horrible using options. But if you were able to do that on the perp, on the long tail, it works quite well. So I think it'll vary per hedge fund and per manager. But I agree. I think it's going to be a high margin business arm for a lot of these teams that get it nailed down.
Yeah. And then the other question, I guess, is you see a lot of like retail participation in equity options on the 0-day expiry stuff. And then the question is, it is comparable to mega high leverage perps, but it's perps are path dependent, right? If you're 100x levered and it wicks down 1%, you're out. With an option, it can go down 3% and then pump back up, and you're still fine. So there are trade-offs there. I think your payout is going to be quite a bit higher on the 100x, depending on where you're buying your option. But yeah, it'll be interesting to see if we see some kind of movement there. Maybe if is Robinhood or one of these guys gonna provide a front end to get exposure to these equity perps, do we think? Or
the speculation is lighter, obviously. Everyone speculates that, and Vlad's talked about it a little bit. And whether that happens or not, TBD. Communications with the team is that they are partnering with Robinhood in some capacity. I think Robinhood's a great distribution angle, but I don't think it's the end all be all for lighter. The team is obviously quite talented. They built in-house RWAs per spot. The bridge even is all in-house, and so they didn't leak value anywhere. And I think that's a very strategic move on their part. I think Hyperliquid has leaked value to Unit. And I think if they could go back and they had the capacity, they'd want to build the spot instead of let Unit come in and do that. So they're not leaking any sort of value there. And I think Lighter is very in tune with that and realizes they don't want to leak value. So I expect as they build out their unified margin, their options, as they've got net interest margin on deposits in the bridge and integrations, I think they'll be very keen on keeping that value in-house. Now, what does that look like with someone like Robinhood? Obviously,
I was going to say
they'll bend the arm type of thing. But
why would Robinhood then want to leak value to Lighter?
Exactly.
Because they already have everything, right?
We saw this happen with Kalshi. Eventually, Robinhood, punted Kalshi out and built it in-house. And so this is obviously
right, because they have the users already doing the activity that they're going to be doing anyway. You're just giving them a new product under the same user interface that they already like, right? Why would you?
And it's super intuitive, super easy. Yeah. They got their 401k, their trading accounts all in one spot. So I think it will be tough for those guys to leave. I do agree. But I think ultimately, back to the conversation on NYSE listing and moving into 24/7 and having digital securities on there, I think ultimately they're competitors at some point. They won't admit to it now, and they'll say, the market is super competitive, super big, but ultimately I think they'll end up competing for the same users, the same liquidity, and same flow. So I think they'll end up competing at some point down the road, but no one wants to hear that.
It's not good for the bags.
No, not good for the bags, and no one wants to talk bad about
But they're just using it for settlement to start, right?
I don't think there's been any clarity even on that yet. It's all speculation right now.
Gotcha.
Yeah.
How have you felt about Lighter's everything post TGE?
Yeah, I've been quite
expectations.
So I got to meet the team down here in Miami right before TGE, and my one piece of feedback to those that I talked to was, "Hey guys, you need to be transparent on your tokenomics and your financials. Whether that's, hey, we're doing X amount of buybacks, or hey, we're doing buybacks, but it's going to be 10% because we're putting 90% into growth and operations for our native stable coin options, building out the sidecar, unified margin, things like that. I think that would go a long way. They didn't do that. Tokenomics were released really, really late. They're still not clear. There's no guidance on how much will be used for buybacks, which I don't think necessarily matters, but we just need to know that there's that conversation is happening and where flow is going. I'm firmly in the camp that one of the reasons Hyperliquid was such a good asset to own last year was because they were hyper transparent. It's like, hey, I know 97% of revs are going to buybacks. As an analyst, that's an easy asset to bring to IC. That is quite easy. You can model that well. That's an easy asset to go to if you're a PM, that's an easy asset to go to your LPs with. That's a good story to tell. With Lighter, you can't tell that story yet because you don't know where dollars are flowing. I don't think we need a true income statement yet, or cash flow statement, balance sheet, things like that yet. But I think it's pretty clear we're moving that way with the new market structure bill. And so I think this should very much so get ahead of that in some degree. And so I was quite disappointed that they didn't really lean into that. After conversations with the team this week, I think they realized that mistake. I think they'll start leaning into that a bit more because it's really hard to model an asset, an investable asset, when you don't know where any flows are going. And so that gets really hard. But overall, I think that the product is still good. They're working on their sidecar EVM. That should be out in a few weeks. And then unified margin will come after that. I would expect that to come in vaults. So you'll be able to deposit it into the LLP and use some of that as collateral on your perp positions. And then I know they're building out options. I'm hopeful they're building out this internally and not using Derive or Cayenne or something like that. And so if they do that, I think that's a high margin business arm for them. And then they've got net interest margin on deposit. So I think they're in a really good spot. They just need to flip the script on transparency around financials. And then I'm a lot more optimistic. I think they're in a prime spot to dominate the US, them and Ostium specifically. I think those two can be big players here in the US. They really just need to lean into the transparency and the US market structure bill and kind of get ahead of the curve. And then they're going to be in a great spot. The product is good. They just need to be more clear with allocators and retail on where flows are going and financials and things like that. Because outside of Ostium in the US, they don't have too much competition. Variational, I'm actually not sure where they're based. So I think they've got a good path to dominate the US. And if you end up having crypto rails, doing some settlement and whatnot for bigger players, who do you think it's going to be? Do you think it's going to be Hyperliquid, who's not US based? Or is it going to be Lighter, who's a U.S.-based team who has their founder in D.C. all the time and meeting with regulators? Who's it going to be? And I think that's a uber bull case. But even without that, I think they have a great product and new business lines coming that are going to be high margin.
No, I've used Hyperliquid, Lighter. I do like it. I think it's a good product as well. I agree. He's kind of playing the lobby regulatory card here. Smart, right? It's kind of like the Coinbase approach to an extent. So,
and then I'm also somewhat concerned for those that don't know, they increased their fees, or they're raising their fees to market makers. While I've been in the boat that I think they have pricing power there, I wouldn't raise them this much. So what they're doing is they're requiring market makers to stake. They haven't been clear on what amount, but stake an X amount of light to get the discount back to the current fee model that they're at. I think this could pull liquidity on their platform and widen spreads a bit, which I'm not too optimistic about. My thing is you should probably keep market maker fees as low as possible for as long as possible, which gives you time to ship differentiated products, which is your options, your unified margin, debit cards, on-off ramps, things like that. And while keeping liquidity really good, because then once you have those products, then you have sticky users, sticky liquidity, and things get a lot better for them. Because ultimately, their model, the PFOF model, trading fees themselves aren't the long-term moneymaker for them. It's the ancillary products and flows.
Yeah.
So
I don't know if I like that model.
Yeah.
Because as a market maker, basically all your profits can be wiped out instantly by the token, just dumping for some reason out of nowhere.
Yeah.
And then you can say, oh, you could borrow the borrow the
if you're holding it and
token, but then you're paying the funding costs with it, and it's not clean, and it does.
That's increasingly hard because a lot of these people forget market makers. They're also usually investors to some extent, and when they can't model a floor price for an asset, which comes back to the transparency on financials, they're not going to step in and bid, because to your point, if all of a sudden they're bidding at $2, it drops to $1.50, they can't take that kind of hit like that.
I mean, can you imagine if you had to buy DYDX to market?
Yeah, exactly.
Right, it went down every day for 3 years.
So clearly to me, it seems like it's like, okay, like they want to sync for the token, but like it seems like they could probably get a similar result by like, with USD staking or something that's different. Like I don't like if they want to I don't know. This seems like a very suboptimal solution.
I think they chalk it completely. That's what I would do. I'd be like, hey guys, this is a bad idea. Let's go back. Like that's what I would do.
I'm very against at this point, after all the years we've been here, of like forcing people to own tokens for different reasons. Like I don't think these utility type plays ever really work. No. They always just add friction. They always turn people away. And there's been enough times people have got burned now that I think there's just a lot of just apathy towards any of these models.
Yeah. What would you, what would a better solution flip look like to you? If they were, I guess, kind of intent on increasing fees, like what would you do instead of this? Because this obviously doesn't seem like a good.
I think right now I'd leave as is.
Just not even try it right now.
No, I wouldn't, because your money makers are going to be these other business lines, and that's how you're going to build brand reputation, and that's where I would lean into. I think the reason you keep fees as low as possible is you're buying your time to differentiate the products.
Yeah,
and I think that's what they should keep doing. That's what I would do if I were them. And then you can and then also you have to stake in order to get access to the LLP.
How much more are they making from this increase? Like assuming volume doesn't leave, assuming market makers don't pull liquidity because they're doing this.
TBD, because it depends.
Yeah,
because we don't even know like what tier, how much you have to stake to get to this fee level. So we don't know. There's not much transparency. That's been super vague, which should be out in the next 8-9 days. So we'll know more then, and we can talk about it next week. But right now it's very vague, and I don't love that. And they're doing similar stuff with the LLP where you have to stake in order to deposit. I don't love that because they're trying to bring down the LLP TVL because they want to be able to have higher yield there. Because law of large numbers, once you're $1 billion market maker, you can't keep running the same strategies to get the same returns. And so I think they should just let it keep growing, and you're not going to have these crazy 50% APYs in your vault. You're going to have somewhere between 8 and 10. I think that's just fine. I don't think you should be optimizing for max APY in your vault at this point in their life cycle.
Makes sense. Yeah, I don't think I have any more questions on Lighter. I think you hit everything there.
Are they able to just because the Perps business from a revenue perspective is very attractive, right? That's very high margin revenue. Yes, it's volatile with activity, but it's still fairly consistent and can scale well. I guess it's not necessarily that sticky because people can choose somewhere else to trade, whereas a product like a credit card or something like that is definitely a bit more sticky. Once you're in. So what I was going to get to is, does the math for them to get a decent amount of revenue from these other ancillary services compared to, the trading side? Because I get to some extent if it is somewhat of a commodity, providing trading. And so, you definitely have this assuming everyone's getting relatively comparable execution, you do have this kind of race to zero on fees. And so it makes sense to try and win that and almost use it as a loss leader to build out, your user base for these other assets you can monetize. I guess the question is basically, how monetizable are they? And when you do monetize them, does it get to a big number?
Yeah, I would options. It depends what you charge, but I would just yes. Like I've been modeling the numbers. I'm not at a spot like going back and forth with the team that I feel comfortable sharing them. But like yes, they should be, great revenue drivers. That like perps, for the foreseeable future will still be the main revenue driver. But options should come in at number 2 quite shortly. And I think ultimately what these guys end up doing is doing a subscription model, similar to Robinhood Gold. I think ultimately they end up doing a gold service to where all of a sudden, I'm a retail user and I want to pay whatever $4.99 to trade on Lighter. And in doing so, like paying for this service, I all of a sudden can use my LLP as collateral on my perps. Then I also get access to options, which will have a higher fee. So I think there's interesting ways they can monetize that going forward. But like, does the math? Like, yes, the math is good, but it ultimately depends what they're going to charge on those products, which I'm not sure. That was a non-answer for you, Jan.
No, I get it.
Right on. I don't think there's anything more to talk about perps. Really.
Saylor is burnt out on perps now.
Yeah, I don't know, man.
Saylor doesn't even trade perps, bro. He probably hates these conversations.
No, I mean,
he's an angel. Come on.
Yeah.
Spot Maxi over here.
You disclosed your Monad Angel even when it wasn't brought up, and you haven't mentioned the Lighter Angel once.
No. I'm not Angel Lighter.
Not Lighter.
Angel Bulk.
Bulk, yeah.
Which I think is we'll see how it's a Solana one.
It should be good.
Yeah, I think they have like a test net right now, so we'll see how they go. I mean, the Solana specific perp market is wide open still, and I do think that there will be a winner there, right? Because there's just a lot of people that use Solana and would rather just use Solana for perps, right? So I still think that alone is like its own opportunity, and then there's like the bigger, which is like going after Hyperliquid and stuff, right? But I'm more interested on like the technical, size of perps rather than just like raw as a trader. But yeah, I don't know. It's funny that the market totally just retraced everything as we've been. It happens every time on this podcast. It's like we think it might be okay, and then full retrace of everything. I don't know. It's funny. This kind of reminds me a bit of. I mean, last year I guess was worse to start the year, because it's like down only every day. This day there's like, I don't know, it goes up and down, and stocks aren't like terrible yet. But yeah, did you guys see? So Monero has been performing quite well to start the year, and there's always kind of this like Monero versus Zcash debate. It turns out like the reason for the Monero pump is someone stole like 200 something mil, and then was just twapping Monero on like different dexes to get out. I think that, so we kind of talked about this internally on like the research call. Like Monero versus Zcash is really interesting to me. I think that Monero is really like a pure privacy play. It's also associated with like nefarious criminal activity, right? It's like, it is the privacy coin for criminals as it stands today. And a lot of people who are bullish on Monero will tell you that you want to own the privacy coin that criminals like, right? Because that means it's doing its job well. And that's a thesis with it. Zcash sits in this interesting kind of like middle ground to me, where I don't know if it's fully a privacy play. I also think that Zcash has done a good job of like Zcash, the privacy narrative for Zcash is from like a freedom angle and like individual liberty and out of like the eyes of the government and stuff. Whereas the Monero privacy angle seems to be more about like all the way, just like pure crime privacy, I guess. And maybe that's wrong, but like that's my perception, and that's I think the perception that a lot of the market has, right? But then Zcash also has this like Bitcoin hedge angle, which I'm not sure if Monero has. Like if you think about institutions, if they were to buy a privacy coin, I find it really hard to believe that they would And I mean, maybe they wouldn't buy privacy coins at all. Maybe, and like that's probably a good thing. Like that it just is a totally individual thing. But it would be really hard for me to see any sort of like big money, even like funds, get really behind Monero. Whereas Zcash, it seems like there's much more willingness to get behind it. And then Zcash has got like this tech angle. It's like the quantum thing with Bitcoin, right? Some people are looking at it as a hedge now. Not that Zcash is quantum resistant, but there are, paths to make it. And like the shielded pool by nature makes the coins less quantum hackable to begin with and everything. So I don't know. I've kind of just been thinking about these two recently because I think that privacy is clearly a narrative for this year, and it will be moving forward. Like I definitely believe that privacy is coming back, and so it's like Monero is pure privacy. Zcash is kind of this hybrid with like privacy, and then this other like quantum zk tech stuff, right? And I mean, I own Zcash. I don't own Monero. But could I see a world where Monero is the one that does way better this year? I could, for sure. But I think I don't know. I think these like are pretty. It's like an interesting dichotomy between the two, and just seeing like what moves prices. Like a lot of Zcash's movement at the end of last year had to do with the Winklevoss twins aping a dad, right? And then a lot of the Monero price action this year had to do with the $200 million hack. It's just like. It just kind of shows the buyer base, and you can say that like the tech, like at the end of the day, it's like criminals could use Zcash as well. But the thing is that like they don't. It's like when Thorchain was used as like North Korea's money laundering thing. Like it doesn't matter that Thorchain is like this permissionless DEX thing. If it launders enough money for North Korea, it's going to be under the purview of regulators, like regardless of any of these arguments you make, right?
So for me, because I don't know enough about either of these things to have a strong opinion, my strategy is I own both.
Yeah, I mean, that's obviously
I don't know which one will win, but if there is a privacy coin that wins, it's probably going to be one of them. And if one wins, the other will probably win too, just not as good. So like,
yeah, there's nothing worse than being right on the thesis and expressing it.
Exactly. I just own it. I mean, I don't own Monero yet. I still have some Zcash that I was buying towards the end of last year or whatever. But I'll probably pick up some Monero. That's like my plan. And it's just like, yeah, I just own. It's not like a basket of L1s where there's like a fucking 100 and you have no idea, like, right? It's pretty clear. There's only two.
Yeah. It's crazy.
It's pulled back quite a bit. Like, what was the time period for the TWAP into it? And then
I was going to say, because it had like a pretty
and
strong, like yearly, like it wasn't like fucking spiking, but it was just like continually grinding up for months and months and months.
Well, the big move, it basically fully retraced. It's not liquid at all. So on Jan 1, it was 420. Today it's 508, so it's still up a bit. But from Jan 11th, which I think the hack was on Jan 11th.
Okay,
so like or Jan 10th. No, the hack was Jan 10th, I think. And basically from Jan 10th to the 14th, it went from like 450 to 750, right? And then it's kind of like consistently now drawn back down.
So it's where it would be if that hack didn't happen, right? Just
basically.
like
so there's still like, there is this privacy narrative, and these two, there's like a lot of, it was January 20th. It was January 10th. So that's exactly when the chart turned.
Yeah.
It was 282 mil. Litecoin and Bitcoin due to hardware wallet, social engineering scam. And then, just instantly started converting to Monero. That's a lot of money, man. 300 million, like holy.
So it all like, do you know what time period it went into the chart at? Like, was this in order of days or like
over the next 2 or 3 days, right? It was just TWAPed, I believe, from Jan 10th to the 14th, or
Yeah, I mean, Zach tweeted about this on the 16th. And so it was done by then, I'm assuming.
Yeah,
or maybe
that's what
not.
it was on its way down. Yeah, it had already peaked. It peaked on the 14th, so it like had that ridiculous. So if the hack happened on the 10th, the next day is when.
I don't know if they topped it all, actually. But so like there might have been front running of this too. People saw that this guy was doing this. And so there was more buying of Monero for that.
Sure. People would. Yeah.
Whatever happened to?
Yeah, that's what I was wondering how long it took. Basically, if you did it over the course of hours, then you don't really have that much time. If you're doing it on a long time period, then you have
Whatever happened to the BAT token? Like the whole privacy meta going on. You've got Braves. Their token, and it's like not moved. Is anyone following that?
Brave for privacy? Wasn't
Yeah.
Brave like the Brave token was you watch ads and you get some tokens back, and like
Yeah.
that was how
Yeah,
it worked?
protection. Yeah.
That has nothing to do with
It's
privacy.
still, I just looked. It's still
What?
trading at almost 300 million market cap.
That's
I think
great.
it's more the browser was private,
Yeah.
The browser was
and
private.
the demand for a private browser would lead to
I actually use Brave.
I did too.
to this day.
My default.
Yeah. It's just like I've just been using it, and I don't know. I still use
How many-
Chrome for some things because sometimes some websites don't like Brave.
So do you accrue BAT tokens?
No. It tells me though how much time I've saved. It says that over my lifetime, I've saved 2.5 days by
Of watching ads.
by blocking trackers and ads. 40 gigabytes of bandwidth saved, and 4.3 million trackers and ads blocked. So I don't know if that's real or not, but it makes
when
you
you're watching
feel.
ads, go on news websites or like. What?
I don't
Daily
know.
Mail?
Maybe it's just like pop-ups. The thing is, you can like install your own like
Yeah.
anti-pop-up stuff, right? I think when they started doing this, it was people didn't like build this in as automatically and everything. You had to download these weird extensions, but now I think it's pretty common to just block that stuff.
Yeah.
But I don't know. I still like it as a browser. I don't use it for any like privacy reason. Like when I did at the beginning for sure. I didn't like know any. Like when I didn't know any of this shit, man. So I even like with VPNs, I'm like I turned my VPN off my phone a few months ago because I was like, what am I actually getting with having a VPN on my phone? It honestly just makes my life a bit more annoying because like a lot of things don't like it, and then I've got to turn it off, and I got to turn it back on, and it's just like I don't know. I still keep it on my computer, but even still, it's like, what is the real benefit I'm getting from it? And I've kind of brought this up, and a lot of people will say how like you actually should not use like VPNs are oversold for their like privacy benefits and all this stuff.
I think it's good to use when you're using public Wi-Fi.
For sure, things like that, 100%.
Yeah, or just apps that I can't access wherever I am.
Yeah, I mean, I was never under the illusion that using a VPN was a super private solution. It was mostly just to avoid geo.
Yeah, I mean that's the thing, right? That's how I've just always used it to use it. I felt like, I need to be protected. Like it's like I feel naked if I don't have a VPN on. But I think that's just like a psychological thing.
Something I started last year was I just don't do crypto on my phone. If I'm out and I'm not at my apartment, I just don't do it. It's such a better. I mean, I do have like a hot wallet to like ape some shit if I need to, but like
I've basically never.
I don't want to do stuff on my phone. If I'm out, I want to not have to think about trades and positions and stuff. Like,
I mean, I've basically never been able to do stuff on my phone. There's one time when I was testing one wallet. It was kind of cool. I was just trading. I had like some dollars in it, and I was trading some like Solana shit coins, like Mother, and some other stuff. And I remember I was in Japan, and I was still able to trade some like, I think what was the other one, Gecko or something, Gecko. So I was just trading these like meme coins, with a few bucks. And I was like, this is kind of fun. But I've never been the mobile trader type.
I had centralized exchange access on mobile, and then I never touched mobile in ETHland. And then once memes and Solana became a thing, it's when I the only wallet I have access to is a Sol wallet on my
Sol meme wallet on my phone. Exactly.
Yeah.
Yeah, because you already kind of expect that money to be zero, and so
Yeah, I'm just trying to be as quickly as possible, be exit liquidity for someone who's an insider.
All right, is there anything else you want to talk about? It's been 55 minutes.
Are y'all familiar? Just one last thing. Are y'all familiar with Jason Chow's kind of structural cyclical framework where he talks about cycles? Well, the way he kind of talks about cycles is, I mean, it's nothing, no rocket science. I'm just going to kind of throw my own spin on it. It's like you've got early consolidation, and you have the early bull run, which we might have seen with Solana moving early, and then with the wealth creation, we really saw it with Hyperliquid to some extent, and that's kind of like phase 1 and 2 of a market cycle. Then phase 3 is wealth distribution, and you start to see a lot more PvP. So we saw that with memes. And then most recently, we saw this with Perp DEXs. Perp DEXs were very PvP. There were incentives everywhere. Everyone was fighting over which Perp DEX was going to win and which one had the best incentives and points and things like that. And then you really start to have wealth destruction, and you have down chop. And I think the start of that really was like 10-10. That was like the moment something had really broken. We had wealth distribution with all the PvPing going on with Perp DEXs, and then we had the wealth destruction with 10-10, and then we've had the sideways chop ever since. And now we're kind of at the point where I think we're in what he'll call phase 5, which is the lull, where bad news is no longer nuking markets. Good news is also no longer nuking markets, and we saw that kind of late last year in late 3, early 4Q, where good news was getting sold off, bad news was just nuking prices. And now we're at the point where, Bitcoin was down 2% yesterday, and you had the NASDAQ and the Qs down 2 as well, and you had NVIDIA down 4. And so you're starting to see crypto, our Bitcoin asset, really start to react better than equity assets for the first time in 4 months. So that's something I've been watching, is like we talk about equity cycles and market cycles, is we're in this like lull period, and you go from this lull into the consolidation and into the early bull. And that's kind of why, for the first time in months, I've like actually started to deploy some capital on buying reflexive assets, because it feels very much so that bad news is no longer nuking markets. And yes, there might be some idiosyncratic stuff with certain tokens where good news gets sold off, but generally speaking, it feels like we're in the bottoming phase in crypto, at least. And so that's something I've been thinking a lot about, is like, where are we in this smaller, 6-month, 12-month cycle? And it feels very much so that we're in the lull bottoming period right before you start to see the early signs of bull, which we might have actually seen over this past weekend with Ralph running and some of these tomato and AI coins really cooking. You're starting to see some life in some random places, but I think we might be at the spot where I'm getting quite optimistic that buys in this range are getting decent.
Yeah, I mean, I was getting optimistic too, and the last few days have been like,
yeah, it would have been a lot better if Saylor didn't just tell us he aped 2 point something.
But if
that being the driver of relative strength, I agree. On a longer term horizon, right now, it's a good bid, but I wouldn't be surprised to see like high 70s, low 80s, and that I think would be a really great time to bid. Because for me, I think for all this thesis hasn't changed, and so. The painful thing is just in that world, alts are going to be looking pretty ugly. But I still think, like you mentioned, if you zoom out,
I think like in no rush to bid, but I think steady DCA from here over the next month or two, call it Q1 as a whole, I think is getting really attractive, and that's kind of what I've been doing. Buying the reflexive assets that might still have 20% down, but I'm okay with that because I've missed the first 60%, 70, 80% down in some of these names.
I mean, I think that framework's like, I think it's similar to like a lot of ways that other people have like spoken about it over the years. Like it's kind of like, right, you have like 10-10, which pretty much just nuked everybody who's like active in the market, just nuked, right? And then you have like, so that's your like, price-based capitulation right there. And then you have like what I forget who initially called it. It's like price-based capitulation, then like time-based capitulation, which is effectively the wealth destruction, and then the lull, right? It's like whoever didn't get wiped out by the nuke gets wiped out by the sideways downward chop after the nuke. and then it allows whoever's left or new money to come in to, pick up the pieces and accumulate and, set up the foundation. Yeah, it's like, I think that generally makes sense. And I think, Q1 is like the period you look for. And I think all of the things you mentioned as like factors or proxies of what a like reaccumulation might look like are true. And it's kind of like, look at other things that we were talking about before, just like general trading activity on the perp dexes, right?
Yeah.
Like, is that recovering? It doesn't need to be at pre-1010 levels, but you look at trends of things, right? Like, is it increasing week over week, like trading volumes, open interest, right? Stuff like that is like a sign of risk appetite. Trench graduation rates on meme coins, right? Like things that are like potentially leading indicators of flows into these names. I think, it's the best way to judge if that reaccumulation is going to happen or not. And I think you're starting to see that, yes, a lot of those things are pointing in the right direction. But to Jan's point and the point we made earlier, it's like if we retest Saylor's entry, which seems like a meme, right? Like it's such an obvious meme. It's like a CME gap meme or some bullshit. Like it just seems like it's going to happen because it's like a funny outcome. It's a meme. Like everybody's going to, think of all the memes. Like it'll be like a Titanic meme with Saylor when he's finally underwater. Like just like it just seems so obvious and funny that like the simulation will have it happen. So like visualizing what your favorite altcoin looks like if Bitcoin's like, minus 10% with a liquidation into 76K or something. It's like, that could not look great. But if you're not dead, probably a fantastic buy, which is, where I would shove whatever money I'm willing to stake in crypto back into the market.
Yeah, I think you often see the like just in terms of the Saylor price, you often see that not even a meme, people just trying to dunk on him, saying, "Oh man, look, he's is at his cost average." That's not the right way to look at it. What you compare is the price of strategy when he started buying to now.
Yeah, that's not what Peter Schiff likes, dude. Peter Schiff's
I know.
Every time he tweets under Saylor's like announcement of buys is so funny. Like today, yesterday, he was like, "Oh, after 5 years of buying Bitcoin, it's only up 20% from your entry. Not much to show for it. Should have bought gold."
It's and then price strategy. Yeah, it's a convenient narrative
looking for
someone who's It'll definitely be somewhat of a magnet.
It seems.
And then the lower it goes, the better his MNAV goes, and he can just start. Like there is some resiliency to the model in that he can, like the lower it goes, the more cash he kind of gets, unironically.
And also, like it's new Fed share front running is coming for that. Like even if like there's just so many things coming down the pipe, like election midterm year. Like I don't know, I just don't see a world in which like Trump and Besson are in like, okay, like we clearly can't go into midterms with like markets in like some kind of, February, March, April tantrum, like tariff tantrum, like type pullback or something. Like we're very clearly in a world where politicians are like do these things, right? Like I don't know. It's hard for me to get bearish with like the backdrop of 2026. Spending.
You also have the stimmy checks that'll probably come from tariff stuff. But the question is basically, last time we got them, you had deployment across both equities and crypto as just great places to speculate. But the question is basically whether that'll continue here. Right? I assume you get some retail activity on stocks, but the question is basically, will people?
No, it's going to go into the DraftKings accounts for the World Cup.
Yeah, true.
That's where I'm going to send it. Let's be real.
All right, I think we should wrap it. But
cool.
I think that was a good episode. Hopefully,
Well, we started in Bitcoin was 90K and it's like 86 or some 85, 87.
87 and a half right now.
Must have been a pretty bad show.
So
we'll see where we are in 2 weeks. But thanks for tuning in. Thanks for everybody on the episode. And we'll see everybody again in 2 weeks.
See you guys.
See ya.